Maruti numbers are out, and it's a day of big numbers. On the face of it, they look good. You know, when the tide turns, it really turns fast. You've seen good numbers from M&M, HUL coming in, and now Maruti as well. So here are the numbers that we have. Net profit at 3,710 crores, revenue at 38,413 crores, EBITDA at 3,995 crores. Margins are pretty decent at 10.4%. All of this in line actually with NDTV profit estimates. Let me go across to Puneet quickly on what the core numbers are.
Well, thank you for that. So definitely revenue as well as EBITDA is largely in line, and you're seeing that big boost in terms of the profitability largely on the back of other income. So the other income in this particular quarter has come in at 1800 crores. This was roughly 970 crores in the same time last year. So the 700 crore miss versus the estimates that you see on profits, it's largely led by the other income component. The other aspect was that this quarter was expected to be impacted due to commodity cost. Steel prices have inched up by 6% on a quarter-on-quarter basis, and Maruti, because of the size and scale, does get impacted because of that. So 10.4% margin is bang in line with estimates in that aspect. The two key monitorables, which will be from the conference call today, scheduled at 5 p.m., will be the launch of the e-Vitara and the expectations. The company had mentioned that they'll be looking to launch it sometime before September, and that will be one of the key monitorables because that will lead the export growth in the second half.
Right. Just hang on, Puneet. Just stay on with us. I'm just going across to Mayuresh Joshi for a quick view on this. Mayuresh, first cut of the numbers. What are you making of it?
Afternoon, Samana. In line, I think the expectation largely was for a decent growth. I think Maruti has probably delivered that when it comes to top line. Margin, as Puneet was mentioning, I think it's generally for the auto industry with input costs, specifically steel prices being relatively higher, margin impact was expected to take place. But I think all depends in terms of the commentary. The competition intensity is obviously here to stay. But the commentary in terms of how are they looking at demand, specifically in the festive season in the next few months and quarters, how is the overall demand environment expected to play out? And therefore, I think management commentary will do the trick for a lot of these automakers, largely numbers in line with estimates.
Numbers largely in line with estimates is what Mayuresh is saying. Puneet, what are the internals telling us, and what are the key factors we have to watch out from the commentary which will come in the con call?
Yeah, so as I rightly was saying, the EV launch will be the biggest one because the company is expected to show almost 70,000 units of sales from export of these EVs, which will start from September. So it's a time crunch essentially of 5 to 6 months where they'll have to show and produce, and this will lead to the export growth of 20%. That's very, very key because the domestic market is just expected to grow by 2 to 3%. So that will also drive the margin because of higher average selling price. And I think the launch of that will be key. And the second, of course, will be the commodity cost because that seems to have had an impact on the EBITDA margins for Maruti. So those will be the two key monitorables for me. Con call scheduled at 5 p.m. today.
So the Maruti call at 5 p.m. today, and then of course we'll have more on it. So far the stock sort of oscillating in the last few minutes. One quick spike when the numbers came in, but has come off as well. Rajesh Palvia with us, Aditya Shah with us this afternoon. Rajesh, welcome. Just a quick take on Maruti since we've been talking about it, and then we'll of course get to the bigger picture on indices, etc.
So good afternoon. Looking at the near-term, short-term structure, stock is now negotiating with its falling trend line on the weekly chart. Stock is forming a contracting triangle formation on the weekly chart. So I think any breakout about 12,750 can take this stock further higher. So 12,750 is the breakout level for this formation. I think looking at the near-term structure, there is a possibility that stock may attempt to give breakout above that 12,750 zone, and if it happens, so I think rally can extend towards 13,000 level also on the short-term perspective. On the downside, the critical and important support area for this pattern is placed at around 12,350. So I think one needs to keep 12,350 as a stop loss if you are already in the trade of on the long side for Maruti.
Okay, that's the story with Maruti. What about the indices? What a smart recovery. Rajesh, showing some real strength going in there. More to come?
Still, it's struggling to cross major resistance zone, which is placed at 24,850. Even in the today's session, also the major call writing activity was witnessed for the 24,850 zone. So I think that level is needs to cross on a closing basis. If we able to cross 24,850, yes, there is a high possibility of further more recovery towards 25,000 level also. But yes, looking at the this announcement of tariff, I think maybe we could see some volatility in next one or two trading session more. On the downside, 24,600 is the key support area as we are on the expiry day for this July series. So I think around 24,750 plus minus 25 point would be the expiry range for the session. So I think we may close around 24,750 plus minus 25 point. But yes, if we continues to hold about 24,700 in the coming days, so I think some recovery may takes place. 24,850 would be the first resistance. If he crosses, then yes, really can extend to 25,000 level also. So strong recovery. This is the positive development from the lower level for intraday perspective as well as for near-term trend perspective.